Hey everybody, what's up? It is Wednesday, August 28th. Stock market is rebounding. Very interesting EIA weekly petroleum report. I want to talk about that today because, as you know, the big news, which is all over the headlines, is the inverted yield curve, the new historic low on the 30-year bond yield, and everybody's saying this is a recession predictor. Okay, they've been saying this for a long time. Every time the yield curve inverts, and it's inverted a number of times so far this year, the headlines are blaring. This is a recession predictor. Let me talk about something. Oil, petroleum, is a very economically sensitive commodity. Okay? Now, we've been hearing these recession forecasts based on this inverted yield curve. And by the way, just not to get off subject here, but I've given my explanation of what has been happening with the bond market and bond yields. And again, that goes back to the debt ceiling. It starved the entire global financial system of the most important collateral for over 4 months. You're talking about more than $1 trillion worth of treasury issuance that did not happen at a time when banks had to have these instruments as part of their tier 1 capital because the Fed was draining reserves from the banking system. I've been through all this. But anyway, all you hear, the recession. In fact, people are like, they're angry, like, we gotta have this recession because the yield curve is inverted. All right, fine. I could be like way wrong on this. But let's just go over some of the numbers in today's EIA Weekly Petroleum Status Report, which covers the period through August 23rd. So very recent, all right? Talking about through last Friday. Oil inventories continue to drop. Crude inventories were down at the lowest level in 10 months. Okay, we had a 10 million barrel draw. All right. We had the largest distillate draw in 5 months. We had another gasoline draw. I think it was also the largest draw in 2 months on gasoline. Demand. Let's talk about demand, because if we're in a recession or at the precipice of a recession, based on the inverted yield curve, let's talk about demand, because that would be affected. This is a very economically sensitive commodity, petroleum. Demand was blowing through the roof. 17.4 million barrels a day on the refiner inputs. That was down a little bit from the prior week, but still well above 17 million barrels a day. Gasoline, 9.9 million barrels a day. As a matter of fact, if you take the 4-week average of gasoline, which is kind of a better indicator because it smooths out some of the volatility, that was at an all-time record high. Gasoline demand at an all-time record high. Recession? Really? Distillate demand up. What about exports? Exports would be some sort of a barometer of external demand, right? Foreign demand for our oil. If we're going into a global recession, I think it would be fair to say that demand for our oil would drop off. This has been the 3rd week in a row we have seen an increase in crude oil exports, back over 3 million barrels a day and heading higher. Refined petroleum product exports up in the week ending August 23rd. So, folks, look, let's be real. You got everybody saying, looking at one thing. You know what this is? This is to me anyway. And again, maybe I'll end up being way wrong on this, but this is a classic example of what I call axiomatic thinking. People like to just simplify everything by saying there's one axiom, one known thing, that when that happens, then we know something else is going to happen. The problem is when it comes to markets, when it comes to economic systems, it's never like that. It might look like that sometimes, and that's what fools you. It's a dynamical system. There are so many millions and trillions of different pieces to it. And I talk about this a lot in my Forex course that I sell about the dangers of axiomatic thinking. So everybody now saying the yield curve is inverted and we're going to go into recession. But meanwhile, record gasoline demand, exports rising sharply, inventories being drawn down, right? And that's only part of the picture. Like, how many videos do I make every single week talking about bank credit going up, talking about loans and leases going up, consumer loans, commercial and industrial loans, real estate loans, commercial real estate loans, automobile loans. So what's it going to be? All right? Anyway, sign up for my report, MMT Trader. Go to pitbulleconomics.com. Get a 30-day free trial. Sign up. Get the Forex course. All the courses are there. The best course for 99 bucks is Understanding the Daily Treasury Statement. All this stuff, this information is free. People don't look at it. They don't understand it. That is the greatest resource that exists out there. Nobody uses it. All right, everybody. See you tomorrow. Bye-bye.